Kunal, afternoon. Seems like almost there for 26K. But what about the leadership? Because today you're not seeing banks or any other sector, but actually metals power ahead.
Yeah, I think so. Today it's a bit of a change in terms of the sector approach. But when we look at this, even the bank Nifty after this kind of a mild profit booking or so has managed to respect that previous day low. So over the last 7 or 8 days consecutively, we've seen that the bank Nifty has made a higher low for itself. So I think yesterday's low, for example, was closer to 53,600, 700 for the bank Nifty, and we've not tested that 53,800 odd mark for the bank Nifty today. So that itself is a indication that maybe there could be a couple of days of pause for the banking index, and if you manage to just about adhere to the previous support levels, then we could build on to the rally. Today what we are seeing is that the markets, even after the bank Nifty not performing, has not letting off, has not gone into a zone where the risk appetite has gone down, because now you're seeing other sectors like the PSUs, metals, these high beta sectors, they are managing to make a strong comeback for themselves. So that risk appetite or risk on mode is still on, and maybe a couple of days of consolidation for the bank Nifty. But I believe eventually we should see many of these private sector banking names heading up significantly higher than where they are today.
Okay, that's a take coming in on the markets right now. Naresh, what's your sense on the market and this rally in metals? Do you expect it to extend?
We could see an extension in the rally in metals, specifically more on the aluminium side, because we've seen a decent recovery in aluminium prices also, as well as alumina prices. And if you look at Hindalco, it has made a new all-time high. You have Vedanta, which continues to be at an all-time high if you adjusted for dividends. And Nalco also today has sparked up. So looks like this side of the metal pack looks more interesting than the steel names. So I would continue to like Hindalco, Vedanta, and Nalco.
Right. Let's welcome on board Gurmeet Chadha as well and find out what he's making of the markets right now. Gurmeet, not pure play commodities, but commodity stocks definitely, and in particular metals after, China talking about a slew of measures and a fair amount of rate cuts as well coming in the remainder part of the year too. That sort of instilled a sentimental move on metals. But would you look at it from an investment point of view?
We've got to be more tactical when it comes to metals and commodities, Aisha. I think, as you pointed out, any stimulus from China, whether they have announced a host of measures, clearly tells you that now I think they have to resort to more stimulus to revive the economy. And also, traditionally, if you see, a weak dollar in the rate cuts, I'm not saying weak in like absolute sense, but a relatively weaker dollar is always positive for commodities. So I think a multi asset approach is advisable at this point of time. Valuations are stretched in a lot of pockets. BSE's and NSE small cap, for example, trades at 35 times earnings. If you see, almost 50% of the stocks are seeing EPS downgrades. So valuations are stretched. And at this point of time, if you can diversify towards precious metals, which is gold, silver is both probably precious and industrial, and some maybe ferrous and non-ferrous, as well as bonds. If you see, we are beginning now. We have Bank of Switzerland this week, which is likely to cut rates. China has announced a host of measures, and will follow through. Possibly they'll start first with CRR cut more rather than the rate cut, considering how deposits have been a bit of a struggle for banks. So rate cuts, stimulus from China, relatively weaker, dollar is always positive for commodities and also bonds. I think bonds, if you see, my sense is you will see a softening of 50 to 100 basis points. I've been making these points for the last 6 months. And a lot of us, while we track equity returns, the bond returns are also in double digit in last 10 years. So I think it's important to preserve what we have made last 2, 3 years. I think the returns have been very, very good. So maybe a little more prudent and balanced approach will ensure that we preserve these returns.
That's the latest strategy that you should be following in the markets. Hi, Gurmeet. Anisha also joining in the conversation. What's the sense on the likes of Paytm, Nykaa, PB Fintech?
So we've been, constructive on PB Fintech. Maybe there's a bit of a professional bias because I come from financial services, a very asset-light model. If you see now an online sourcing of insurance, 90% plus are now being sourced from the Policy Bazaar platform. In fact, HDFC and ICICI earlier were not part of the platform, and such is the power of the platform that they also have signed up. Paisa Bazaar has been leaking less. I think so it's been leaking money a little bit, but now I think that's stabilized. So in terms of online, in terms of client lending, almost 20-25% leads are now coming from there. And in insurance, when you're a distributor, the commissions are upfronted. So when you are an insurance manufacturer or an insurance provider, the gestation period is long. You become break even over a 5 7 year period. As a distributor of insurance, you tend to upfront in some of the policies like endowment and assured payback. The payouts are in excess of 50%. So I think it's a great marketplace. Valuations were a little stretched, so you will see periodic profit booking. So that's something which is there in the portfolio. I've been discussing Zomato with you for a long time now. It's done pretty well. My sense is quick commerce has a lot of long legs. We have, I think, all put together. Look at Zepto, Blinkit, and even Swiggy, Instamart put together. Quarterly run rate of quick commerce is just about 2,500 crores. I think this figure could be 4, 5, 6x on a quarterly run rate. And here you're not really deep discounting. You're actually charging a convenience fee for quick delivery. So you're basically integrating with the local ecosystem, which is your mom and pop stores and kirana stores, which politically also makes sense. So for us it is Zomato and PB fintech as far as the new age businesses are concerned.
Okay, that's that on the new age businesses. But let's tell you what's the disappointment today, and that's surely been IEX. And here's why. Sources are telling our channel that the government is moving ahead with the market coupling of power exchanges and has asked the Grid Controller of India to complete the pilot study on time. In fact, let me take it back to my colleague Prakash Priyadarshi, who broke this story earlier in the morning.
Yes, we are learning from our sources that the government is moving ahead with the market coupling proposal. Our sources in the Power Ministry are confirming that the government is committed to implementing market coupling of power exchanges. In fact, Power Ministry has instructed Grid Controller of India to complete pilot study on time. Grid Controller of India is conducting a pilot study under direction of CERC, and therefore now instructions have been given to the Grid Controller of India to complete the pilot study on time. We're given to understand that Grid Controller of India is expected to submit its report within a month, and then CERC will take a final call on the date of the implementation. A very significant development coming in. Sources are also informing that the Power Ministry is planning to implement a new mechanism either by end of the current financial year or at the start of the financial year 2026. A very significant development coming in, as the market coupling will ensure uniform power price across power exchanges and help government to increase overall electricity trade on power exchanges.
Well, yes, an important story, and the impact is visible on the screen with IEX stock being down 11%. But Gurmeet, do you track this one, IEX? Any view?
So actually, we had some exposure. We exited this last year for the same reason, too much of a regulatory overhang. While in between few quarters, volumes showed a bit of a surge. So they operate in different segments, and it was showing some traction. But there are more better opportunities on the power value chain. Look at the power generation demand is now likely to breach all-time high during Diwali. It reached an all-time high figure during peak summers. So the generation itself will grow at about 12%. I think NTPC is still very favorably priced, still at about 18 times, 4-5% dividend yield. And you have an NTPC green IPO now, which could lead to some value unlocking. And they have huge capacities coming up on the thermal side. Clear market leader both for generation as well as installed capacity. Other than the green energy, we've seen Tata Power doing pretty well. In terms of both the thermal portfolio as well as on solar panels. Then you have other, the grid makers like Power Grid, the cable and wires, the transformers, insulators. I think there is a very secular demand on the entire power value chain, and you would prefer where there is less of regulatory overhang and more valuation comfort. So we are invested in Tata Power, NTPC, Power Grid, and some of the cable and wire makers.
Okay, another news, and in the latest crackdown by SEBI on the SME IPO market, news agencies are reporting that the regulator is probing select bankers to IPOs of small businesses. In fact, Sharad from my research desk is here to give us more details on the same. Sharad?
Well, from agencies, what we are gathering is that SEBI action is coming in for the SME IPO investment bankers. As per the agency's report, roughly 6 investment banks are actually under the question. However, the names have not been disclosed yet. SEBI is worried about the malpractices which are happening in the SME IPO space, and that's a cause of concern which we had already raised at ET Now as well. At least half a dozen of them have come in, especially on the fees part. It's expected that they have charged roughly 15% of the IPO size, the raising fund, and the market trend that suggests roughly between 1 to 3%, which is much higher and prevalent in the India. Also, the higher fees might be charges to shore up high subscription numbers also, and the bids, they might not be genuine and might have been cancelled before the allotment as well. Now SEBI is looking to curb this nexus when it comes to the investment bankers and the investors and the HNIs who might be operating these issues. Also, the SMEs, if you look at it, they have raised almost 6,000 crores in FY24 as compared to just 2,200 crore rupees in FY23. Also, there has been a lot of commentary coming in from market folks, especially SEBI's whole-time director Ashwini Bhatia. He had also spoken about all the people like merchant bankers, chartered accountants to advise on a right basis or the SMEs when they come for their listing. And also Ashish Kumar, MD and CEO of NSE, they have stated that the stricter guidelines would be appointed. Of course, in the SME space also, there are certain stocks which would be in focus. A lot of trouble brewing in the SME IPO space. Recently, Trafsol IT Tech, the BSE had deferred the listing of this SME company. And of course, this was the first company after the subscription. There has been a deferment. It was subscribed almost 345 times. Also, the merchant banker for this was Ekadrish Capital. Also, Archit Nuwood would be in focus. The IPO was delayed due to the queries raised by the exchanges, especially on the company's profitability going against its peers. Its merchant banker was Share India Securities, and over here, look at their issues in 2024. The names include VVIP Info, GEM Environ, AVP Info, as well as Pune E-Stock. Also recently, Resource Automobile, a 12 crore IPO which had come in, huge subscription of almost 400 times. Now the stock is trending almost 40% down at 72 rupees against its IPO price of 118 rupees. And a lot of instances are also there, especially like Verinium Cloud and Ad Shopee Retail, which have been removed from the SME platform. So this is a very kind of a shock coming in when it comes to the SME IPO ecosystem, but the cleanup is happening. That's what we are taking our stance at ET Now.
Shara, thanks so much for that.
Still counting down to that 26K mark for the Nifty, but we're doing okay. Metals, of course, is your key trade today. Other than that, there's a TechM, HCL Technologies, there's M&M, there's Wipro, Tata Motors, Infosys. They're all also perking up. Gurmeet, before we move forward, just wanted to get your sense in on IT. Because a lot of question marks were raised post the Fed rate cut. You did have a down day also for IT on Friday. What next then?
My sense is you got to be more selective. Recently, I was reading a report that data is moving back to premises. More than 40% exit is happening from cloud. So, this is a space where disruption is the new normal. And my sense is we need to probably track US economy better and see if the financial system there and overall deals from there are showing any signs. My sense is US looks like a little soft right now. So we got to be more selective. We are more focused on where we are getting good dips like KPIT, which is more on automotive software. You also look at some of the new age names like Zomato. You look at some of the large cap names if you get some dips, likes of HCL Tech or Tech Mahindra. But there's very little valuation comfort, right? If you buy IT services at 30, 40, 50 times, the near term returns would be disappointing. So we are right now neutral and more constructive on financials. I think Nifty is at a new life high. So congratulations to everyone.
A fresh record high and 26,000 finally indeed. All throughout the trading session, we were going close to that mark, less than 10 points away, but it wasn't happening in a hurry. But finally, we've managed to conquer that mark of 26,000. Though I think we've come off from there the moment I think we hit that. Are we building on to gains? Are we sticking with that? That's the big question, because earlier we were talking about 26,000 by Diwali, by end of the year. But at the rate at which we are going right now, who's to say perhaps we could end the year with a much higher number as far as the markets are concerned. In fact, in terms of the big contributors right now, let's pull up the names which are actually doing quite well in the trading session, especially from the frontline index. It's Tata Steel, Hindalco, Power Grid, Tech Mahindra, ONGC. These are your top gainers. While on the losing side, it's HUL which is sulking, SBI Life, Grasim, Ultratech Cement, etc. But Nuresh, quickly coming to you, this market setup, 26,000 on the cards now. Where do we go from here on? What's the next level to watch out for on the Nifty now?
So the momentum has been strong. We've got into a lot all-time high. In this case, trying to take a level better is to keep shifting your trading stop losses. That comes down to 25,500. And given that the last highs from the last highs, we could go towards 26,500 also possibly. But overall, the bias is positive. Until the time banks continue to support, the upside is open because banks have not done well over the last 3 years. So we don't know how much of a momentum it can continue in.
That's the thing, right, Kunal? Because it's a touch and go with 26K, while optically, in any case, we're there. And today, it's not your key banking, IT kind of sector supporting it. It's largely metals. So, are you convinced with this 26K? Because in the morning, you were talking about as to how you do see 26K happen, and we even build on to the gains.
Yeah, that's the good part about the markets today. That even with Bank Nifty being negative, we've managed to cross that 26,000 mark because we have support from other sectors. And when a sector churn plays up in a very classical way, where each sectors, they tend to have a phase where those sectors, they tend to participate, and then once the rally extends or gets into an overbought, these sectors or these stocks get back into a consolidation, and the move shifts to the other underperforming names or the ones which were consolidating in the previous leg. So I think that's a classical Baton kind of a rally for the within sectors, and that keeps the market a lot more healthy. Now look at it this way: from 24,000 to 25,000 mark, I think we took around 22, 23 trading sessions odd, and from 24 to 25K, it's almost been 40 to 45 sessions for the index. So that itself tells you that the last 1,000 points, even if it looks like that the move has been more steep, but it's taken a lot of time for the index to move from this 25 to 26K mark, and with this kind of a sector churn move, it looks like that should be sustainable.
Yeah, I think almost 37 sessions is what we took to kind of hit that mark as far as the all-time high in 26,000 is concerned. The last 1,000 points being gained in the 37 sessions. 34 stocks out of Nifty 50 have given a positive return if you look at that time period. Some of the top gainers that have contributed to this last leg of the rally include Bajaj Auto, Shriram Finance, Bajaj Finserv, Bharti Airtel. So these were the pallbearers which actually took the Nifty higher. Not your usual banking names or HDFCs, ICICI of the world. They will perhaps be participating in the next 1,000, but for now it's belonged to Bajaj Auto. You had Shriram Finance, Bajaj Finserv, Bharti Airtel, even Hero MotoCorp and Bajaj Finance participating, but not other heavyweights, not the financials, at least as far as this number is concerned, with the Nifty hitting that all-time high. But that's the next question that I have for you, Gurmeet. Do you think the next leg of the rally will actually come from financials and the private banking names at that?
I think very high probability. You will see a lot of treasury gains with decent yield now. As if you see from last quarter, it's down like 30 basis points, which translates to about 2 or 3% absolute gains on what you're holding. It will lead to some stability in NIMs. NIMs have been under pressure as rates were going up. It's a little more positive for NBFCs because they are more dependent on wholesale sources in terms of cost of funds. And that is why you've seen a bit of a leg up in some of the NBFC names you just took. I think some of them are still subdued. There's one name we really like is in the space, Ugro, which does only MSME lending. They have their proprietary machine learning model, which is something very similar to what Civil is for individuals. They developed something very similar for MSME. They did a fundraise of 1,200 crores, but that hasn't really led to any change in market cap. Trades below book almost. And then there are even better names like Poonawalla and Bajaj and some of the other names. So I think NBFC should be focused. Gold NBFCs could come back. And of course, PSU banks. I think there's a lot of value comfort there. A lot of them are at book or below book. And I think they haven't really participated as much. So once, you have better quarterly earnings, more stabilization in terms of credit deposit ratios, I think banks will probably, the PSU banks and some of the tier 1 banks may join the party soon.
Gurmeet, great to have you on the show. Thanks as always for taking the time out and joining us. And what a moment it's been. 26K here on the Nifty. Still got half an hour of trade to go. So let's see whether we sustain onto these gains or not. For now, of course, it's just been a touch and go moment with that level. But Kunal, what about your closing ideas?
So I'll go with the metal pack, and Hindalco looks to be a stock which is coming back into a breakout mode. So, there was JSPL as well as JSW Steel, which are leading the charge from the front. But I think Hindalco is also trying to play a very strong catch up. So that's a buy.
Right. Naresh, what about your closing trades?
So that would be Hindalco. a very strong chart here, making new all-time highs. 3-4 attempts done around that 720 mark. So looks interesting for the short term.
Okay, let's get you another piece of interesting news. And according to our sources, we understand that SEBI, the board is going to be meeting on September 30th. While the final agenda of the meeting is not finalized yet, the board may be discussing issues related to charges against Chairperson Madhvi Puri Buch. Ankur Mishra, my colleague, is here with more details on what he's picking up from his sources. Ankur?
Yes, sources say that SEBI board meeting is set to happen next week on September 30, and it will be first time that board will be meeting after there were serious allegations which was leveled by Hindenburg Research against SEBI chairperson Madhvi Puri Buch herself. Now it will be interesting to see whether or not the board take cognizance of all these allegations and if there is a discussion in the board meeting. But what we do understand through sources is that there is likely of approval of mutual fund light regulations. Remember, there was a consultation paper which was already floated by SEBI regarding light regulations for passive mutual funds, and also we understand that a new asset class for mutual funds is likely to be approved in the next board meeting, and this was for the category of high risk taking investors, whereby the SEBI wanted them to deter going to any of the unregistered portfolio managers and creating a new asset class for these investors. But most importantly, we understand that there might be discussion on approval of new norms on future and options. Remember, there has been a long discussion on these norms with the stakeholders. The stakeholders have already submitted their comments, and the proposal was that there is going to be an increase in the margin of future and options traders. So all these options, all these suggestions will be considered by the board, and we understand that there might be approval of F&O norms which may happen in the next board meeting, but all will depend after the final agenda which is circulated by the SEBI, as it is yet to be finalized what all items in the will be discussed in the board meeting. But for sure, this is the first time board is meeting after the serious allegations of Hindenburg Research.
Yes, that first board meeting, so definitely will be important, but we'll wait by for the agenda to get more details.
If you like this video, then like, share and subscribe to ET Now.